Hello viewers, I am Muhammad Abdul Habib. Welcome you all to our application AIMS tutorial. In this video, we'll be discussing chapter 4 journal. Let us have a problem. Page number 37, question number 7. In this video, we'll be discussing all the transactions individually, and at the end of the video, we'll see how our solution should appear. Let us start the problem. Page number 37, question number 7. Generalize the following transactions. The transactions are given for the year 2014 for the month of March. And the first transaction is given on March 1st as commenced business with cash rupees 13,000 and stock worth rupees 7,000. So the heading will be taken as journal entries, and the format for journal entries is date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. Commenced business means the business has been started. So the owner of the business in this problem has invested cash worth rupees 13,000 and stock worth rupees 7,000. So as per the rules of real account, debit what comes in. Whatever is coming into the business, it should be debited. So in this transaction, cash is coming into the business, cash worth 13,000 is coming into the business, and stock worth 7,000 is coming into the business. So cash will be debited as well as stock will be debited. So in date column, the date will be taken as 2014 March 1, and the journal entry will be cash account debit 13,000, stock account debit 7,000, to capital account 20,000. Whatever has been invested by the owner into the business is called as capital. And the narration will be taken as being business started. After completing the journal entry, we'll draw a line like this. Coming to our next transaction, which is on 2014 March 2nd. It is bought plant 5,000 rupees. So here the date will be taken as 2014 March 2nd. Bought plant in the sense the business is purchasing plant. So plant is coming into the business and cash is going from the business. So the journal entry will be plant account debit 5,000 to cash account 5,000, and the narration will be being plant purchased. After completing the journal entry, we'll draw a line. Coming to the next transaction, which is on 2014 March 3. Paid for postage 500 rupees. The date will be taken as 2014 March 3. Paid for postage. It is an expenditure to the business. So cash is going from the business. So cash will be credited and the name of the expenditure will be debited. So the business has paid cash towards postage. So postage will be debited and cash will be credited. So the journal entry on 2014 March 3 will be postage account debit 500 to cash account 500, and the narration will be being cash paid for postage. Coming to our next transaction, which is on 2014 March 4th. Withdrew cash for office use 1,000 rupees. So here the date will be taken as 2014 March 4. Withdrew cash means cash is coming into the business and the amount has been withdrawn for office use. Then bank will be the giver. So our journal entry will be cash account debit 1,000 to bank account 1,000, and the narration will be being cash withdrawn for office use. Coming to the next transaction, which is on 2014 March 5. Paid for sundry expenses 500 rupees. So here the date will be taken as 2014 March 5. Paid for sundry expenses. It is an expenditure to the business. So cash is going from the business and the cash is being paid for sundry expenses. So sundry expenses will be debited. So the journal entry will be sundry expenses account debit 500 to cash account 500, and the narration will be being cash paid for sundry expenses. Coming to the next transaction, which is on 2014 March 6. Paid into bank 10,000 rupees. So here the date will be taken as 2014 March 6. Paid into cash means the business is depositing cash into bank. So cash is going from the business. So cash will be credited and bank is the receiver of the amount. So bank will be debited and the journal entry becomes bank account debit 10,000 to cash account 10,000, and the narration will be being cash paid into bank. Coming to the last transaction for this problem, 2014 March 7. Paid salaries 5,000 rupees. So here the date will be taken as 2014 March 7. Paid salaries. It is an expenditure to the business. So cash is going from the business, cash will be credited and the name of the expenditure will be debited. This time the business is incurring expenditure towards salaries. So salaries will be debited. So the journal entry on 2014 March 7 will be salaries account debit 5,000 to cash account 5,000, and the narration will be being salaries paid. So now let us have a look how the solution should appear. This is the heading journal entries, and this is the format for journal entries: date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. So this was our first journal entry 2014 March 1. Cash account debit 13,000, stock account debit 7,000, to capital account 20,000, and the narration was being business started. So followed by second and third followed by subsequent journal entries. And after each journal entry, we'll be drawing a line in the particulars column like this. Hope you have understood the topic. See you all in next video. Thank you.